Hi, I'm Tom Lydon, editor of ETF Trends here in Hollywood, Florida at the Inside ETF Conference. I'm here with Jeremy Eld, Director of Research and Investment Strategy for ALPS. Jeremy, great seeing you.
Hey, thanks for having me, Tom.
We talk about a lot of different sectors every time I see you, but one thing I want to hone in on is energy.
Yep.
It seems like with energy decline, it's throwing the baby out with the bathwater. It's affected all markets.
Yep, it really has. I mean, we're in the middle of what is probably the worst decline in oil ever. Oil goes up, oil goes down, but the difference this time is that it's taken so long to recover. Usually investors are back to even 12, 18 months out. We're a year and a half since oil was at 110, and I think we're much closer to the bottom than the top.
Well, let's hope. But other areas have been affected.
Yep.
And here we are, 2016, advisors are thinking about strategies.
Yep.
Okay. If we are more closer to the bottom than the top, not only what's the prospect for oil, but other areas that are related to oil, like MLPs.
Yep. Well, what's happened is, because of this great decline in oil, the S&P energy sector is probably going to pose a loss this year. That hasn't happened since 1967.
Wow.
So when you're talking about things that haven't happened in 50 years, every part of the oil spectrum gets hurt. Whether it's the guys taking the oil out of the ground, the people refining it into gasoline, or the MLPs in the middle. And that's where we think there could be some opportunity, because they are selling the whole sector, and there's some opportunities there with higher quality companies.
Right. So yields right now for MLPs still pretty attractive, right?
Yeah, 10, 11, in some cases 12%.
Amazing. And valuations,
yep.
How do we put that in perspective?
They're really, really low, but what I think investors need to do in a time like this, first, recalibrate risk tolerance, because it's been a bumpy ride, and it's probably going to be a bumpy ride for the next few months. Mm-hmm. Focus on high quality companies that A, can pay distributions, and B, can grow them, but most importantly, be patient.
Yeah.
We think that with these opportunities today, patient investors will be rewarded down the road.
Talk about high quality. There is concern in the oil fields, defaults. You know,
Yep.
I've even read about some auctions that are going on right now.
Yep.
How are MLP-related companies different?
Well, what you want to focus on is, what is the credit quality of the MLPs? Because everybody says, what happens when oil and gas companies go bankrupt? Well, newsflash, they already have. All of the lower quality companies are starting to go bankrupt now. Fortunately, if you stick on the high-end quality of the MLP spectrum, almost 90% of it is investment grade. So if you can stick to higher quality companies, it's a much, much smaller likelihood that you're going to run into those kind of defaults.
Yeah. These are the times that test your fortitude, right?
Exactly.
It's a gut check for many,
Yep,
but also it may be an opportunity,
Yep.
and these are the tough things that we have to talk about.
Yep.
So it's going to be interesting to see when we're together a year from now what
Yep.
actually happened.
Absolutely. Yep.
Jeremy, as always, enjoy the time.
Yep, thanks a lot for having me, Tom.
Thank you.